So anybody who trades or invests doesn't know what we don't know. We're in the predictive business. So you don't know what you don't know, but you can anticipate because it's going to happen. It's just when is it going to happen? The guy in front of you at some point, if you stay behind him, is going to hit his brakes. It's just when. You can go a long time before he hits his brakes. But if you stay behind him, at some point he will. And that's where the market. So it could come when it rallies. Let's just stay on that side. If it rallies and rallies, at some point it's going to find some resistance and find a top. And it could be temporary top. It could be more permanent. Either way, you're going to have sometimes a pop and then drop really quick. So you have to anticipate what we don't know and then stack quickly probabilities and know when those are wrong. And right in here, you also have to be able to explain why you think the top could be in close to the top, not way down here. So if the market stops here and then breaks all the way down a bunch, and then you say, oh, this is the top, too late. That's like saying it's going to rain after you're wet. No value in that prediction. But there's a couple things that you watch. And I always say this for people looking at this chart. There seems like there's a lot on this chart, but there's really not because it's streamlined into a few things and there's different time periods on them. But when you look at if too many longs come in and reach and get long late, that's one sign of a temporary top, at least a temporary top, and the end of the rally. So that's one thing. When you finally squeeze out a bunch of shorts is another indication that the top could be in. So you have less shorts because they just got stopped out. Think about your own trading. When you get your short price going against you, you finally get stopped out and then it goes down. And you're like, as soon as I get stopped out, it comes off. And that's the dynamics of what makes the market go down, less shorts. But anyhow, so you get late longs that come in and buy it, and you get less shorts because they get stopped out. So those are a couple really good and important tools to watch when you're trying to anticipate when the rally's going to put the brakes on. And then there's this add pull feature that we have that you want to see the top number inside this yellow circle get big and the bottom number get small, and even go negative is better. That's showing you a lot of people are jumping in trying to sell it when the top number gets big or bigger than the bottom, and buyers are backing off, which is what you need for the price of anything to go down, right? A lot of people not just selling it, but trying to sell it and can't get filled. There's a difference between filled orders and orders that want to get filled but aren't right now, because that's ultimately why price moves. It's not necessarily the sellers that get filled. It's the sellers that say, holy SHIT, I want to sell it. Come on, fill me. And then they lower their price and lower their price and lower their price. That anxiety among the orders is what creates moves. And the more anxiety there is, the faster the moves, stronger the rallies, weaker the breaks, and all that stuff. All right, so that's another feature of when a bunch of offers come in and a bunch of bids pull back, that there might be a top. All right. And so then I want you to watch, we get this little pop and then it comes off and you get many more longs than shorts, which is indicative of this green, what we call laser. You see these hollow green, which are shorts that are getting pushed off the boat. So less shorts. And then this thing goes sell balance. All right. And I'm going to back it off a second. Now, if you're not anticipating this stuff, you're not going to see it. And if you do, you're going to be way late. You have to anticipate what you're looking for in order to have yourself or give yourself a chance to see it. If you just want to put yourself in a position to say, well, I'm just going to predict when the guy in front of me is hitting his brakes when his when his brake lights go on. Well, okay, great. I could train a fifth grader to know he's putting his brakes on when his brake lights go on. How about anticipating that he's probably going to put his brakes on? There's a jerk in front of him, cut him off, right? You have to have that extra skill to give yourself an edge. So we play this in real time. You don't know what you don't know. You don't know if there's going to be a temporary top, and you might even be really bullish as it pops. But then the head scratch moment of, and you see this top number go negative before the pop. Let me show you that. So before the pop, watch this, these two numbers go negative, this top number go negative, and then it pops, right? Boom. We know shorts just puked with these green hollow bars. And we see this imbalance of a bunch of offers come in and a negative bid, a negative bidders, right? They're backing away, they're canceling their bids. So less shorts, this imbalance, and then you're going to see this red laser go from net short to net long, which are the longs reaching. And when the longs reach, a good metaphor analogy is it's like putting a ladder on a picnic table to pick apples, and you're on the top rung of that ladder, by the way. Where you might get the apple, but boy, it's a lot of risk reaching. And so many people, especially early on in a career of trading, are late. They buy after a rally, they get short after a break. They're using price to break price. And so all this stuff happens, and then we break, and then we stay weak. And you can't say down here, hey, that looked like a rejection. Yeah, no kidding. I'm soaking wet and you tell me it's going to rain. If we go back, there were the probabilities that stacked that that could be the case in real time. And I don't care if you're trading short time frame, swing trading, or investing. Location is important on every time frame. And if you try to avoid reading the real time, then go become a plumber or a carpenter instead. Because you have to understand to time your trades, to know what's going on, when it's going on.